5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Stock futures rising after the S&P 500 posted its biggest drop in 3 months. Japanese bonds rebounding, lifting global debt markets. President Trump brushes off concerns of jeopardizing trade deals with European Union countries ahead of his speech in Davos. And Netflix out with a cautious forecast due to higher program spending and a potential cost issue associated with the Warner Brothers bid. So let's take a look at these markets. A rebound, you could say, but we're well off our highs. We are in the green, but just barely for Nasdaq 100 futures. So it remains to be seen how this mood shifts throughout the day. We're obviously waiting for President Trump to speak in Davos later. That will impact things. And we've had calls for calm, for example, from the Japanese finance minister, also Treasury Secretary Scott Bessent in Davos yesterday. Bessent also telling reporters that Japan's economic authorities had assured him that they were going to calm the situation. Let's take a look at bonds, because we did indeed see a little rebound in Japanese bonds. The 10-year yield down about 7 basis points and that 30-year yield down about 14 basis points. We're not back at levels, though, before yesterday just yet. The 10-year yield here in the United States still well above that range that we had put in for several months now. We're still at 427. And then take a look at gold, because this morning we are hitting more records on gold. Right now we're above $4,800 an ounce, and we did top $4,900 an ounce. The VIX hovering around 20. All right, let's get to some individual market movers this morning. Over to London and Chloe Melly. Chloe.
Good morning, Bonnie. Netflix shares are firmly in the red this morning after the company provided quite a lackluster forecast for the first quarter and also said that it would need to pause buybacks so that it can accumulate cash to fund this pending deal for Warner Brothers. So despite the fact that fourth quarter numbers were actually quite strong, this outlook and also this news on buyback really disappointed investors, and we are down almost 6% in pre-market trading. Moving on to the aviation industry, and United Airlines is in the green this morning because fourth quarter numbers were ahead of estimates, and it also said it expects 2026 to be quite strong thanks to both international and domestic travelers. This echoes another upbeat outlook as well from Delta Airlines, and therefore we are up more than 4% this morning. And finally, Intel is extending some of the gains that we saw yesterday. That is after the company was both upgraded by HSBC and Seaport, and that is thanks to really strong AI demand driving orders, and so this brightening outlook for Intel, and is reflected in those shares today.
And Intel had a good day yesterday as well. Chloe, thank you so much. Chloe Melly there. And coming up in this hour, more conversations from Davos you don't want to miss. We're going to be speaking with Salesforce CEO Marc Benioff. But first, U.S. stock futures could be staging a recovery after the biggest drop in the S&P 500 in 3 months. We're off our highs, but very definitely pointed green. Joining us now is Bloomberg's Ven Ram. Ven, was yesterday an outlier of a day? Had liquidity something to do with it when we look at what happened in Japan, for example? Or was this very definitely, an intentional sell-off?
Well, it was an intentional fall-off, at least as far as the JGB route was concerned, because, what happened new was Prime Minister Sanae Takaichi talking about, tax stops on food sales, and that meant that, the government is looking at a additional fiscal gap of $32 billion, equivalent of $32 billion. Now, the key question for the markets is, that is coming at a time when the BOJ is already behind in its battle against inflation. And if you add that fiscal gap without an explanation of how they're going to fund it, that added to the market's fears. And that is why we saw the kind of selling. It was a multi-standard deviation event. One, in an entire lifetime of 30 years of trading or thereabouts, traders are likely to see only one such instance of such a ferocity of move. So I do think that the rout was coming. And it just so happened that it happened yesterday. But I think that the rest of the markets, if you look at the global markets, the sell-off in equities, that's not the GGB sentiment spilled over, obviously, and obviously you've got things going around on Greenland, and which is adding to negative sentiment. But I think that in the U.S. stocks arena, as far as U.S. stocks are concerned, I think that this could be a buying opportunity.
It does seem like potential buyers are stepping in this morning. Ven, thank you so much. That is Bloomberg's Ven Ram. Over in Davos, the standoff around Greenland and trade continues to dominate.
It's not a term of the trade agreement, and this is what I keep trying to say, is we should compartmentalize these
But for the
things.
Europeans, it'll be an additional tariff.
Potentially, that's right. Yeah.
So for them, it is part of the trade agreement.
Yeah, and I understand how they feel about that. I mean, one thing to keep in mind is that the trade agreement with the Europeans did not purport to solve every problem. And it didn't solve every problem. It solved a lot of problems, and it put us on a good path. But there are a lot of things it just didn't cover.
Joining us now from Brussels is Bloomberg's Oliver Crook. Oliver, when are we going to figure out if something is going to happen in Davos? Do we need President Trump to arrive there and start having conversations?
I think that will probably determine what the forward progress is going to be between Europe and the United States, which I think it's fair to say has probably reached its certainly in the last kind of several dozen years, a low point in the relationship between the sort of traditional allies of the United States and the American president. Donald Trump will be arriving in Davos at some point a little bit later today. And of course, everybody wants to get in the room with the president to try to get an understanding of what his thinking is. The rhetoric from the president of the United States has been somewhat different from some of the rhetoric from some of his advisors, who are really trying to get people to not focus on the Greenland issue as much. You know, Jameson Greer there saying that basically the trade deal that's already been agreed to with the Europeans has nothing to do with Arctic security, has nothing to do with the tariffs that are being threatened. We heard it from Scott Bessent yesterday, the U.S. Treasury Secretary, saying basically everybody relax, calm down. What is all this hysteria? We had hysteria back in April over Liberation Day, but it was not really anything. We had Howard Lutnick writing in the Financial Times that everything will be sort of resolved in a sort of reasonable way. For the Europeans, this feels a lot like basically gaslighting, right, from the U.S. administration. They're the ones who are conflating these two issues of Arctic security and trade. And for the Europeans, they say, how can we not react to this? And the only reason that it resolved itself last time was because the Europeans rolled over. And I think there's a sort of dawning realization in Europe that they cannot continue rolling over indefinitely. Yesterday, it was the trade deficit. Today, it's Greenland. And tomorrow, it'll be something else if they don't stand firm.
You know, there also seems to be this trend of members of the administration, including the president himself, putting out there in the open for everybody to see communications that perhaps were meant to be private. Today, we're learning that Scott Bessent said the Deutsche Bank CEO, Christian Sewing, called to basically dismiss his analyst report, George Saravelos, saying, you know, there could be a bit of a sell America trade going on if this continues. And Christian Sewing essentially told Scott Bessent that he doesn't believe his analyst. Do we know any more about this?
Yeah, really interesting, Vani. This is one of the first notes that I got after the sort of tariff threat that we got over the weekend from George Saravelos, and I'll just quote directly from it, because he was not actually advocating a sell America trade or anything like that. He was merely pointing out that Europe is the largest lender to the United States, that European countries own $8 trillion of U.S. bonds and equities, almost twice as much as the rest of the world combined, in an environment where the geoeconomic stability of the Western Alliance is being disrupted existentially. It's not clear why Europeans would be willing to play this part. And that, of course, got the attention of the bond market. It got the attention of traders and everybody involved in the markets to say, you know, if the Europeans do want to exert pressure on the United States, this is one of the levers that they have theoretically to pull. Now, we should say there is a Danish pension fund, for example. It's got $25 billion, about 100 million of those in treasuries, that have said they're going to sell their U.S. treasuries. All of that being said, Vani, I think it's a very unlikely path for the Europeans to go. This is effectively deploying sort of economic warfare, but it shows how much influence and how much fear there is in the hearts of not just European politicians, but also the C-suite within Europe about the Trump administration, that the CEO of Deutsche Bank needs to call the U.S. Treasury Secretary to say they don't stand by an analyst note, which is just pointing out information.
Yes, and Bessent saying that this notion that Europeans will be selling assets came from a single analyst at Deutsche Bank. I think there are more than one analyst out there saying this. Oliver, thank you so much. That's Oliver Crook. And I do want to point out as well that a spokesperson for Deutsche Bank didn't have an immediate comment when contacted by Bloomberg News. Shares of Netflix falling in pre-market trading after a cautious forecast, citing higher program spending and the potential cost of closing its deal with Warner Brothers Discovery. Joining us now is Tom McKenzie, host of Bloomberg Tech Europe. So, Tom, Netflix did well, but the shares have been falling over the last several weeks and months. Investors seem to be really cautious on this potential Warner Brothers Discovery deal. Why?
Yeah, that's certainly part of it, Vonnie. And to your point, look, the earnings actually beat and subscriber numbers came in above 325 million. So that's an 8% increase. So on those metrics, this was positive for Netflix. But you're absolutely right that there is caution in the markets around the stock, particularly today. And that is about their forecast for the current quarter, where they see actually profit coming in below estimates. And a lot of that is down to the spend. It's not just Warner Brothers, but it's also on these investments that they see. They are seeing attractive investment opportunities in film, in some of their intellectual property. They're building out their gaming franchise. They're building out their live events, but it's going to come at a cost. And of course, there is the Warner Brothers deal as well, which they've amended slightly. So it's now going to be an all-cash offering for Warner Brothers. They also said, executives, that they are getting and making progress in terms of getting the right signals for regulators for that deal. Of course, it hasn't closed yet. They've amended it to make it an all-cash deal. That will come at a cost. So those things seem to be weighing on the share price for Netflix, at least for now. Advocate cost around the deal and around those investments to build out the Netflix product for longer term.
Yeah, I mean, those shares are already down almost 7% year to date, and we're not even through January. We'll see how shares trade today because, of course, yesterday was very risk-off. Tom, thank you so much. Tom McKenzie there, co-host of Bloomberg Tech Europe and the opening trade. Coming up, we go live to Davos with Salesforce CEO Marc Benioff. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. Now let's head over to Davos, where Bloomberg's Emily Chang is standing by. Emily.
Vonnie, thank you so much. I'm here in Davos with Marc Benioff, CEO and chair and founder, of course, of Salesforce. Good to be with you in another country.
Great to see you, Emily. Aloha.
Aloha from the slopes.
You are the Kama'aina of Davos.
All right, so this is my first Davos.
Wow.
This is your 24th.
Right.
Davos.
What's it like being a nice Hawaiian girl here in Davos?
You know, it's chilly, but I'm liking the vibes.
Okay.
What's the mood this year? Are people anxious? Are they optimistic? Or are they confused about the future?
Well, it's an exciting moment. There's no question. This is just an unbelievable, amount of change. And I think when there's this much change and this much excitement, people are a little frenetic. And I think that, sometimes Davos is like a measurement of the economy. That's not what's going on. Well, is the economy good? Is it bad? How are people feeling about the economy? This is more like, well, what's happening exactly in the world? Because you have the AI situation, you have the political situation, you've got, these very broad shifts. And I think that is what's really happening here. There's a lot of discussion. And, Davos was built on the concept of a multi-stakeholder dialogue, the idea that we bring in lots of different kinds of people, political leaders, business leaders, spiritual leaders, cultural leaders, and have a conversation. Mm-hmm. And this year's Davos is about the spirit of dialogue, and that is playing out in spades.
Well, talking about that spirit, we're waiting for President Trump to arrive. You've said you want to see him prioritize U.S. businesses. What does that mean?
Well, I think the number one thing is, for the U.S. president is, as he is doing his job all over the world, he needs to support U.S. businesses and make them successful. And I was with Macron yesterday, and his job is to make French businesses successful. And there's no different. That's the role of the nation-state leader is to help the people of their state. And so I have a lot of respect for President Trump and how he always supports the businesses of the United States.
So you're using Davos sort of as a live demo for some of Salesforce's new digital labor tools. I know you were prepping on Slackbot, but a lot of AI customers are saying...
You're not supposed to give away my secrets, Emily. That's not right.
I don't think that's too big a secret, but a lot of customers are saying they're sort of stuck in AI pilot purgatory. Yeah. Like they're not... Yeah. They're trying stuff, but it's just not working.
It's unfortunate because there's so much that you can do right now in AI. Unfortunately, there's so many false narratives. So I think because so many companies and pundits have said things that are not true, it kind of freezes certain customers and they don't know who to believe. So that's why, like we were talking just before we went on, that Ramon is here, the CEO of Pepsi, it's a new generation, and he just deployed 125,000 of his salespeople, 125,000, supporting millions of businesses, a lot of small and medium businesses all over the world who sell Pepsi, using new AI generation tools that we built for him. Really only took us a few months, and they're getting fantastic results. And that all started actually last year. I saw Ramon, and he once said, I'm ready to get a new level of efficacy in Pepsi. Another, Raj is here from FedEx, the CEO of FedEx. We just finished with him. He was a year ago saying, I've got trouble selling internationally. We identified all of his domestic customers that when they start to work with his salespeople, his website, and they haven't done international, now we surface them as an opportunity for international. It's generated hundreds of millions of dollars for FedEx. So there is great opportunities right now to deploy AI. And look, that's our job. Our job is to sell it, to convince, show the use cases, make people excited about it. And that's what we're doing here. We will meet with more than 500 CEOs one-on-one here.
You obviously have also taken on a sort of, a policy bent. You recently apologized for endorsing President Trump sending the National Guard to San Francisco. What did you learn from that moment, and how will you continue to reconcile the sort of Salesforce Ohana values with the administration's policies, whether it's ICE raids in Minneapolis or taking over Greenland?
That's such a great question. You know, Emily, the way I look at it, and I think that this is probably the right way to look at it, is I've been doing this for 26 years now. Salesforce, amazingly, is 26 years old, 80,000 employees. We'll do more than $41 billion in revenue this year. Presidents are constantly changing, but our core values are not changing. And so we're just anchored down into our core values, and then we just speak to that and what we're trying to achieve as a business to reflect back into our customers and our communities what those values are. As you know, in San Francisco, where we are the largest tech company, there have been a lot of challenges. And so, yeah, I always have anxiety about safety for our employees. And, I think that anxiety just manifests into how can we create a greater San Francisco? And so I'm excited to be working with everyone from Mayor Lurie to President Trump to do that.
You're really focused on AI, and especially its impact on teens, and you've been sort of raising the alarm about AI influencing teen suicides, which is, it's horrible that we even have to talk about this. You've called them suicide coaches. Like, what should companies be doing about this?
Well, I think we should talk about that we are dealing with a new kind of very unwieldy technology, which left by itself, these large language models, they can do all kinds of terrible things. I mean, they can do a lot of great things too. You've used them. They can summarize things, and you can ask them queries, and you can get information. But unfortunately, we saw this year this horrible example where this company, Character AI specifically, started to find that their product was turning into a suicide coach for their customers. And one of the most horrific things I've ever seen in technology is these children, died. And it was completely unnecessary. And I think it needs to be a wake-up call that, we're letting all of this AI technology out fully unregulated. And by the way, you remember, that's true what we did with social media as well. And you probably remember what I said in 2018 here, which was social media was becoming the same kind of very dangerous technology. And look, a lot of governments have made changes around social media now. So you go to a lot of countries, if you're not 17, 18 years old, you're not going to use social media. There are controls, there are protections. We need to get there with AI now. There doesn't need to be any more deaths. We need to be taking this seriously. And AI is great, it's incredible, but these models, they're inaccurate, they hallucinate, they're kind of hard to control.
So what should we do? I mean, should CEOs be held personally liable? I was talking to Demis Hassabis, the CEO of Google DeepMind, and I asked, look, if we knew every company in every country would pause, should we pause AI so society and regulation can catch up? And he said, yes, he would be in favor of that. Would you be in favor of
Emily,
that?
number one, tech hates regulation. You know that they hate it, right? They get people on, it slows down innovation. They hate regulation, they hate it, they hate it, they hate it, except one regulation they love, Section 230, which basically says they're not held responsible or accountable for these deaths or for anything that their social media or their AI does. And that needs to change, because here at Bloomberg, if you say something, you're held accountable. And I own Time, and if we say something, we're held accountable. But these companies are not held accountable because of a very specific federal regulation called Section 230. It needs to be reshaped, reformed, basically restructured to really reflect social media and AI and the dangers that we see. And that is something that we should all be pushing for, that these these companies need to be held accountable. And right now, they're not going to be held accountable because of this regulation. And
right,
so,
and like what regulation is the right regulation? Like California's tried to regulate. David Sachs has his own version. I know you just chatted with him. Like, is there any regulation you
Well,
like?
I'm going to have a one-on-one conversation with David. He's a close friend of mine later today. I hope you tune in. And we're going to talk about that because, look, I think social media kind of is almost like a best practice that we can learn from, that if we look around the world, you'll see that a lot of countries, not necessarily ours, but a lot of countries have made really good changes. And we could make those changes too. Because, you know, it's kind of funny. I'm like a large language model myself. You know, I feel like I'm putting one word together, but I have context, I have a life, I was born, I have a childhood, I have friends, hopefully you're one of them. And, you know, I have a creator, I have a higher power that I'm connected to. These large language models, they're running by themselves. They were not born. They don't have a childhood. They don't have context. They're not connected to a creator. So that they're running kind of in a different way, and then all of a sudden it feels very familiar. It feels like, oh, this is my friend. It's not your friend. So we need to like step in now and look, we can kind of see where it's going. It's not completely out of control.
Right.
So now is the moment, and I think people like you and others should be aggressive about this.
Last quick question, and it feels almost trite going to the stock, but you know, you're trying to build your company on this new emerging technology. Wall Street's really down on software. Wall Street's Salesforce stock is taking a beating, you know, quickly. What needs to happen to
Well, I've been
reverse the
doing this for
negativity?
26 years, and every now and then the software sector kind of falls out of favor. It doesn't mean our financials are out of favor. I mean, we'll do more than $41 billion in revenue this year, more than $15 billion in cash flow. Our margins are more than 34%, all record numbers, by the way. And we just introduced an amazing new version of Slack. You know, that was Slackbot, the new AI-enabled Slack that has the context and the AI built in. We have Agent Force helping our customers deliver customer agents, so we do employee agents and customer agents. We've rebuilt our architecture to have a data layer, an application layer, the Agent Force layer, and then these agents that sit on the top in the ecosystem. That's been a lot of work in the last 3 years, selling a lot of huge deals. But, you know, you sometimes have to wait around for Wall Street to realize, whoa, this is a huge opportunity, and we're just going to keep executing it.
Yes or no? Are you at 1 billion yet? 1 billion agents?
I think we're beyond that. I haven't actually counted them all, but, you know, here's a way to think about it. We now just passed, and I think we're number 1 or number 2 enterprise software company, or maybe software company overall, in the use of tokens. You know, tokens are what these models generate to generate their intelligence. We just passed 11.1 trillion tokens. And you remember we talked after our earnings, and we were about 3 trillion tokens. And that idea that as an enterprise software company, we're publicly reporting and talking about the number of tokens, and I know all of those people, you know, who love Bilbo Baggins are wondering if that's the tokens. It's a different tokens.
All right, Marc, next time we'll have to do this in Hawaii.
It would be
thank
warmer.
you. Yes,
I hope you're okay.
I'm good. I'm surviving. Thank
Are
you
you?
for joining. It's a beautiful day.
I know.
Thank you for joining
all right.
us.
Next
here
time it's Waikiki
in Davos.
Beach. Let's do that.
Absolutely. Marc Benioff, CEO of Salesforce. Guys, I'll send it back to you.
Great stuff. Emily, thank you so much. That is Bloomberg's Emily Chang there. And I do want to point to markets now because futures do seem to be staging a rebound, a definite sense of at least a little bit of calm coming back into the market in Japan. Though we're not at the levels that we were at before yesterday's massive sell-off. But as you can see, futures pointed higher. If we look at bonds, bonds are also rebounding ever so slightly. We have the Japanese 10-year down about 7 basis points, the 30-year down 14 basis points. And that seems to be at least bleeding a little bit into the US market, although we're still elevated with the 10-year yield at 427.67. And I do want to point to gold as well, also being above $4,800 an ounce. It topped $4,900 an ounce earlier. Coming up, a live panel from Davos with Sergio Ermotti, Gita Gopinath and more next. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Stock futures rising after the S&P 500 posted its biggest drop in 3 months. Japanese bonds rebounding, lifting global debt markets. President Trump brushing off concerns of jeopardizing trade deals with the EU ahead of his speech in Davos. And Netflix with a cautious forecast due to higher program spend and a potential cost around the Warner Brothers bid. So let's take a look at those futures. Very definitely pointed higher and back up on the rebound now, having erased some of those gains earlier. So it looks like we might have a green day after a very, very red day yesterday in the United States. It's partially because of bonds. If we take a look at where the Japanese 10-year and 30-year and 40-year are trading well below yields that we saw yesterday. So that 30-year yield is down 14 basis points. It's seeping a little bit into the US, but there you can see the 10-year yield only down about a basis point right now, just a little more than that. We're still elevated at 427.87, and gold is still above $4,800 an ounce. Let's get to some individual movers now for some stocks to watch. Here's Chloe Malley. Chloe.
Good morning, Vonnie. Netflix is seeing some weakness today after providing quite a tepid outlook for the first quarter and also saying it will need to pause buybacks to accumulate cash so that it can fund this acquisition of Warner Brothers. And so despite the fact that fourth quarter earnings were actually quite solid, investors were disappointed by this cautious outlook and those concerns around acquisition costs. And therefore, we are down almost 6% in pre-market trading. Moving on to United Airlines, which is in the green this morning after solid fourth quarter results and also an upbeat outlook for 2026, echoing what Delta has already said. So there might be a rebound in the aviation industry after a volatile 2025. And finally, Intel is having another good day today after a solid day yesterday already. It was upgraded by HSBC and Seaport, and there's the AI demand that's really driving those orders for Intel, and therefore a brightening outlook, which is reflected in those shares in pre-market trading this morning.
Yeah, and that's after nearly a 3.5% gain yesterday. Chloe, thank you so much. Chloe Malley there. So as we've been saying, futures in the green now after a sharp drop for equities the last session. Bloomberg's Ben Ram is back with us. Ben, the Sell America trade does seem to have found a floor. Does it all depend on what President Trump tells Fora in Davos later?
Yeah, absolutely. A lot will be riding on what how he's going to characterize this this spat with the European Union. I think that what we can all take away from what has happened of late and what has happened last year is that, look, this is a market. These are two people, Scott Bessent and President Trump, of course, are two people who are acutely cognizant of what is happening in the markets. And if the markets are in upheaval for a prolonged period of time, that's not something they are comfortable with. And therefore, there is a considerable sense that they will dilute the measures that they have announced. Even if you look at what Scott Bessent was saying yesterday to the press, his message was look beyond what the bluster has been and look to what happened in 2024, meaning they will dial back some of those tensions.
Yes. Ben, thank you so much. Ben Ram there for us in Dubai. Now let's go to Davos, where Bloomberg's Anne-Marie Hordern is standing by. Anne-Marie.
Thank you so much, Vonnie. I'm now joined by, of course, the special envoy for peace negotiations in the Middle East. His portfolio has expanded as well to what's going on in Ukraine, Steve Witkoff. Thank you so much for joining us here.
Oh, it's my pleasure. Thanks for having me.
So this Davos, I thought I would start with you talking about your portfolio, Russia, the Middle East. You successfully negotiated peace in Gaza. But we first have to talk about this elephant in the room when it comes to Greenland. What's the thinking behind this?
Well, I think the president feels, as many other presidents before him have indicated, that it's of strategic significance, importance. It's just strategically critical, and we're in the best position to defend it against adversaries and enemies. And I agree with that position.
The president's talking about if he doesn't get Greenland, there's going to be tariffs on the Europeans. At the same time, you're trying to bring the Europeans on board to get an agreement on their soil, on their continent in Ukraine. Does it make your job more challenging?
No, he makes my job easier, actually. I'm his emissary, and he sets the table pretty good for people like me.
Do you think there'll be an off-ramp on Greenland? What are the conversations like right now?
I think the president is an incredible negotiator. So he'll get to the right place.
And those negotiations could potentially take place here in Davos?
I think there'll be some discussions here.
Do you think a lot of leaders are going to show up to the Board of Peace event? Because Emmanuel Macron has left, von der Leyen's leaving. They're all going to have an emergency summit on Greenland.
We've got 20 or maybe 25 leaders who have already said yes this is not such an easy place to get to. They've already said yes. I think you're going to see overwhelming response. We had many people who we weren't sure if they were going to even want to get an invitation. Now they're calling up for invitations. So everyone wants to be a part of this. What we're going to do here, what the president is going to do here, will be it'll be game-changing for the world.
How have you pushed the ball forward when it comes to Ukraine talks here? I know Kirill Dmitriev was here on the ground.
Yes.
He was tweeting about how the talks went well.
He's a tweeter.
Can you, yeah, he is, he follows me. Can you give us some insight into, if the talks are going well, where are we at this moment? What is the state of play?
Well, the Ukrainians have said that we're 90% done. And I agree with them. In fact, I think that we've made even more significant improvement over this past weekend. We were meeting with Kirill Benioff, who is, of course, their new vice president, ran military intelligence for them, their head of the parliament, David, and with Rustem Umerov. And we made even more progress during those meetings in Miami this past week. I'll be with them tonight. And I think that, and then I'm going to Moscow with Jared. All of these discussions are...
When are you going to Moscow?
Jared and I will leave Thursday night and arrive in Moscow late at night and then go over to the UAE afterwards for working groups.
So do you think we are close to the final 10% of this deal? Do you think this will get done in the next few weeks?
The final 10%, I don't know about the next few weeks, but I know we've made more progress in the last 6 or 7 weeks since Geneva than we've made, according to the Ukrainians now. I'm going to use their, what they say. According to the Ukrainians, more progress than in the last 3 or 4 years.
We've seen, though, Russia continue their attacks, especially on critical infrastructure, most recently energy infrastructure, leaving thousands, maybe millions of Ukrainians without power, without heat. Do you think Putin is truly here for a peace deal?
Well, first of all, they're in a war, and so they're shooting at each other. And we don't condone that. I mean, we think it's unfortunate. That's why the president and me with Jared at the president's direction are working so hard for the peace. We hope that'll occur. We think people, you're right, are suffering on both sides. It's cold there, and not to have heat is terrible. And we've got to correct all of these things. But a peace deal corrects it, and the president is focused on that peace deal. It's a very, very important part of his agenda from a foreign policy standpoint.
But do you think Putin is there, or is he just dragging negotiations on for the sake of it?
I think that they've asked for the meeting. The Russians have invited us to come, and that's a significant statement from them. And Kirill was here yesterday and working on this with us. So I think everybody is embedded in the process and wants to see a peace deal happen.
If we do not get to a peace deal, what does the toolkit look like in terms of potentially more punishments on Russia? I know I've spoken to a lot of CEOs which said it was a pretty big deal that the president went after Lukoil and Rosneft. What other measures do you think we could see?
Well, if a peace deal happens?
If it doesn't happen.
Oh, if it doesn't happen, okay. Well, we've sanctioned them quite a bit. And I'm not sure what the president's game plan would be if it doesn't happen. I think if it doesn't happen, a lot depends on who he thinks is responsible for it not happening. Right now, we have people working together. We're trying to build consensus. We're trying to build unanimity of opinion. We've sent an invitation out to President Putin to join the Board of Peace. The same thing with President Zelensky. So let's hope. I want to choose to be an optimist here. I think we're going to get a positive response from both. I believe that.
If there is a peace agreement, what are you hearing from corporate America and even European CEOs about rebuilding Ukraine and even going back and doing business in Russia? All of them had a presence there, and then they fled at the start of the war. We
have told Ukraine that we think that their GDP, their economy, can triple over the next 10 years. That's an assessment, by the way, by BlackRock, who is working on this, and Larry Fink is here now. They have done an exceptional job, by the way, with our staff. But we have told them that the sky's the limit for their economy, and we believe that. I think that's that could be the secret sauce here. Not just a peace deal, but aspirationally a better world and a better life for the Ukrainian people who have sacrificed so much, and for the Russian people as well.
I want to also ask you about your other big focus, which of course is the Middle East and what is going on with Iran. Have you had back-channel discussions with the Iranians, either directly or through the Omanis?
Well, the president has indicated that there have been some discussions, and that's what resulted in the Iranian statement that the killings will stop.
Do you believe them that the killings will stop?
Well, there's been a lot of killings. And
it's been horrific.
And that's terribly unfortunate and horrific. That's a good word, because it is horrific. These people were defenseless. They were just coming out into the street saying, we want to change. You shouldn't be killed for expressing a viewpoint that you want changes. So Iran needs to change its ways. They need to do that. And if they do, if they indicate that they're willing to do that, I think we can diplomatically settle this.
Have you gotten the sense from this outreach that that is the path they want to solve this, in a diplomatic way?
We don't have that sense yet. We would have, I mean, I think their foreign minister was supposed to be here, couldn't come, or was even maybe disinvited. I'm not sure. I was actually looking.
Do you think it would be appropriate for him to come here, given the level of destruction and killings?
Well, I was looking forward to meeting him, because I think we need to build that communication channel. We have to, because the alternative to that is not a good alternative.
Do you have plans? I know you're going to Moscow. Then you said you're going to go to the United Arab Emirates.
Yes.
Do you have plans to potentially meet the Iranian foreign minister in the next few weeks or months?
We don't have a plan, but I think we're moving in a direction where we could have that conversation if they're willing to have that conversation.
I just want to end on what a year it's been. You're literally at the epicenter of massive seismic geopolitical shifts. You were very successful when it comes to Gaza. You're now dealing with a very hot topic when it comes to Iran. These negotiations continue to grind on Ukraine. What has been so challenging?
Well, first of all, we have a great administration. We have an amazing team. We have the ultimate boss, President Trump, and he sets the table for all of us. But Marco Rubio has been amazing, too. I get to work with the State Department with an incredible array of talented people. And my job is now made even more easier because Jared and I are doing so much together. So the president is focused on solutions. He's focused on cleaning up all these conflicts. He independently has settled 8 wars, and now we're on a path to settle all the rest of them. And I'm proud to work for the administration. I tell the president all the time, these are the great moments of my life.
You don't strike me as you're preparing for an invasion of Greenland, though. So it sounds like potentially that could be solved here at Davos. Could you tell us what the president's going to say?
Well, I don't know what he's going to say, and I wouldn't presume to speak for him. But I think what he's going to tell, I think his feeling is that this is a strategic asset, and we have to make sure it's defended. And Denmark cannot defend it in an adequate way as compared to how the United States can defend it.
And just for logistics, as far as you're concerned, the president looks to be maybe on time now, catching up some speed.
I think so.
Okay.
I think so.
We look forward to his speech, and we thank you for your time.
Thank you,
I know you're
Anne-Marie.
incredibly busy. You have tons of negotiations on the sideline here at the World Economic Forum. Of course, that was the president's special envoy, Steve Witkoff.
Anne-Marie, thank you so much. That is Bloomberg's Anne-Marie Horridern. She'll be bringing us more interviews throughout the day from Davos. And we'll stay at Davos now because Bloomberg's Jonathan Ferro is discussing whether markets are mispricing the future with panelists including Sergio Ermotti of UBS and Geeta Gopinath of the IMF. Let's listen in.
Really seeing the potential upside.
All roads seemingly lead to tech, though, Marc. It feels like it's all one trade. AI. And when we opened up this conversation and talked about what insulates us from the craziness at the moment, it seems to be the money that's been printed at some of the biggest companies on the planet. Is it more than just one trade in your world?
Yeah, so I think if you look at what all of this investment means, you have to look at what's, the next step. And what's the productivity gain? So that's a key point, because if we think about where the S&P 500 is trading, think about where NVIDIA is trading, okay? Or the other tech stars, if we're adding 1 or 2% of productivity gains to GDP over the next 5 or 10 years, or are we adding, on the high estimates, you can see people estimating 5 to 7%. If it's anywhere near 3, 4, 5, 6, 7% of productivity gain, no, this is cheap. These are cheap stocks, okay? And so where's it going? I think if we look at the market, we look at the tech spend that's happening, it's a matter of conviction. So I believe that the AI tailwind is not something that's going to stop tomorrow. Okay, this is a long-term tailwind that's going to happen. We're not capable of choosing who the next NVIDIA is, but what we can do is invest in the infrastructure around it. One thing I'm certain of is energy creation, energy transmission, storage, water transmission, all of this stuff becomes more and more valuable, more and more important, and that's a multi-year tailwind. And you mentioned some of the politicians who are speaking about what's going on in their economies. You know, defense spend in Europe, defense spend in Canada, the budgets are doubling over the next 5 or 10 years. But that's not all going to planes and tanks and aircraft carriers. That's also going to AI spend. That's also going to quantum computing spend. So I think this is not a 2 or 3 year phenomenon that we're going to see. Now, if it turns out to be only 1% of productivity gains, yes, maybe it's overpriced, but there's this binary feeling in the market where either we're in a bubble or everything is green lights. There could be something in the middle. You know, maybe the productivity gains take longer to come online. So then maybe, yeah, maybe the valuations for certain sectors or certain companies are too high. But this is a 5 or 10 or 15-year phenomenon.
Can I take the other side of that? Because the way I hear it traditionally justified is that we benchmark it to the extreme. It's not the dot-com bubble, so therefore it's okay. And there's nothing to worry about here. So I would actually say that people look at history as a way to justify current pricing. It may never be the technology bubble. We may never see that again. And when I hear you talk about technology, you talk about the potential for the tech. But isn't that different to the way we price it in the market? The number one question I'm getting from people at the moment, and unfortunately they don't say it on Bloomberg TV, they say it offline, is what happens if OpenAI goes bust in 2026? What happens to the ecosystem? What happens to the way we price the whole market? That's a very different question to the potential of the technology 5, 10 years out, is it not?
Yeah, I also think you're right. I think drawing a parallel to what was happening in the dot-com days are totally different. You know, these are assets that are making money, that are growing their earnings 30, 40, 50% year over year. You know, if you take Anthropic was talking about their revenue going from $1 billion on run rate last year to $10 billion this year. These are massive gains, right? So I think there's an actual impact that we can measure. None of it can be completely parallel to the past because the future is always going to be different. That's for certain. But I also, one point I would echo with you is that if you listen to the economists or the big investment banks who are making their predictions for what the S&P 500 was going to be or what the next rate cut cycle was going to be in the next 12 months, you know, 3 or 4 years ago, yes, we expect 4 rate cuts over the next 12 months. None happened. We're going to expect 4 next rate cuts over the next 12 months. None happened. So, yes, we're in a brand new world. Everything is changing daily. I do think volatility shocks like what we could hear today from President Trump could have a significant impact on the markets, and that could alter the course of where we're going. But I do think that still you have to try to look long term, which is very difficult in the news flow that happens on the...
Geeta, just quickly, you wanted to jump in?
Yes, now I want us to make this distinction between the potential of the technology and where valuations are, both those listed on the stock market and those not listed on the stock market. We could very well have productivity growth of 1.5% a year, which was at the upper end of the estimates, and still we could absolutely argue that the market is overvalued. Because what we need to do is it's not just about productivity growth. We'd have to figure out, is there a way for all of these companies with very high valuations who are doing trillions of dollars in investment and making at this point tens of billions of dollars in revenue, that they would all be able to generate the profits that justify the scale of investment that's being made and the valuations that they have. That's what concerns me. I think productivity will go up. I don't have a doubt the productivity will go up. I just don't see how all of the current incumbents will be profitable, have the kind of profitability and have the revenue model that can justify their valuations. And the reason for that is that it is a competitive space at this time. I mean, I work with the different LLMs, and I keep switching between one and the other. One day it's, GPT 5.2, then it's Cloud Code. And that's just within the US. You have DeepSeek in China. So I think things are changing in warp speed. It's unclear what the revenue model is going to be for companies. Yeah. And so I think that is what the question mark. So I actually see a disconnect. I don't necessarily see if productivity goes up. That means these valuations are justified. I think you could have you can have question marks over that. And so, yes, so what is true this time around is that the companies, at least those listed on the stock market, unlike the dot-com time, are profitable companies, the revenue streams are not necessarily big ones. The big revenue streams are not coming from their AI investments, but they're coming from other sources. But then you have the other companies that are not listed, like OpenAI, which have very high levels of valuation, and that could be the indirect risk that we don't see.
Bonnie?
Yeah, I totally agree with that. You know, I've heard someone describe it. With AI, there are three FOMOs, right? There's the capacity FOMO, the application FOMO, and the investment FOMO, right? So the valuations we're seeing, right, is probably a product of this investment FOMO on the, well, expectation or anticipation that one day, right, everybody in the world, all companies are going to find ways to apply it, right? You know, and therefore everyone is also chasing the application FOMO. But the productivity gain, you know, which we talk about, has to be backed up by people willing to pay for that productivity gain, right? And I think, Marc, you put it as a time frame issue, right? I think the mismatch of timing, right, between how much people are willing to invest to chase the investment FOMO and when customers are eventually going to pay for that productivity gain and, you know, translate into the productivity of these companies. I think that is really what we need to focus on.
Robin?
I would actually split it into three different constituencies, because I think when we have this conversation about valuation, the way we should think about it is a little different. So we've got the folks who are producing what is increasingly day by day more of a commodity, which are the tokens. So the token manufacturers, that's where the real concern on valuation has really ended up being. And they are creating what is now a bit of a commodity. And so we'll see, is there space for 3 of them, 5 of them, 7 of them? We'll debate. They're spending a lot of money. They'll build infrastructure. The infrastructure is going to be used. The tokens will be created. It's manufacturing capacity. And if one of them were to fail, at the end of the day, we'd probably see some of the others taking over that manufacturing capacity. Personally, I don't worry about that too much. The second constituency is the ecosystem that's built around that manufacturing. These are the folks who are truly innovating with agents and with capabilities that are essentially using that manufacturing capability of the general intelligence from the LLMs. And that's a whole new ecosystem that's going to allow us to do new and fantastical things. And that's not going to go away. It's going to be highly relevant and highly useful to us as we build, as we see and use all of these different capabilities. And then the third group are the users. And that could be us as individuals, it could be us as corporations. And this is where also the parallel with the dot-com boom breaks a little bit. We didn't see the type of productivity gain that we're talking about here on stage for the users over a fairly short period of time back then that we could see now. We didn't sit here saying, wow, Amazon, my ability to shop online, the rise of AWS. We didn't see those things as transforming 1, 2, 3, 4, 5% productivity gains year after year compounding back then. Now that is how we're talking about it. So I think by looking at the three constituencies, you can say, is the market assessing where the value's ultimately going to be correctly, and how do we look into the future? There's so much obsession about that first bucket, that manufacturing of the tokens, but it's easy to miss the real adoption and integration, which is much more in the second two categories.
Sergio, where do you stand on that?
Well, look, I don't think I can really add much more than what has been already well explained by my colleagues here. But one thing I would say that you mentioned before, AI bust. I mean, AI is here to stay and it's not going to bust. Maybe some people may disappear. I mean, like in the old days, you know, Netscape as a browser doesn't exist any longer. But you know, but my point is that, of course, we touched on that. But when we talk about valuation, timing is very important. And this is the ABC of investing, right? So, I mean, the issue is that it's undebatable that even if it takes longer, we're going to create economic value. Mm-hmm. So, but what matters for investors is, number one, not pretending to bet on any of these players being the ultimate winner, because at the end of the day, it's going to always be a race. And the second one is that is how long it's going to take to create this output, economic output. In every major transformation we saw in history, we saw the same elements of people in technology for sure, overestimation of how impactful it will be in terms of financial returns, and underestimation of the scope of the changes. And going back to the infrastructure part of the equation, you know, other people made that analogy with the railway system in the early days of the transformation of transportation, right? So it's exactly the same issue.
Is it fair to say that railroads don't depreciate in quite the same way GPUs do?
Well, maybe not, but it's an example on how a transformative process that created economic output created some collateral damages. And we need to accept that some investors will suffer, particularly the ones who are trying to do stock picking in investing in the sector.
Marc?
Yeah, I think one point I wholeheartedly agree with you, Sergio, on is the importance of diversification. I think you mentioned that earlier. But there's diversification in a few different ways. I think diversification of asset allocation and geographic investment is important. We're seeing, you know, I take your point before, never bet against the U.S. The U.S. is going to continue to grow, and it's going to be the big market to invest in for now and for the future. But what we're finding is a lot of our investors, for that incremental dollar that they have to invest, they find themselves underweight Europe. And so they're saying, okay, maybe now is a good time to rebalance because I'm very exposed to the US. I'm exposed to a lot of these tech names. So now is a good time to invest in Europe. And maybe I want to do it through the private markets. So we see a lot within our buyout business or within our infrastructure business. But the other way of thinking about diversification is within the asset strategy you've selected. And that's important too. And I think trying to find return streams that are kind of decorrelated. And that really limits your risk. You know, in our infrastructure business, yes, we invest in data centers, but we also are the largest investor in Heathrow Airport. You know, what drives the return for Heathrow Airport is very different from the data center that we're invested in. I think that's very important.
How expensive are those uncorrelated assets right now compared to the big theme at the moment?
You know, I was talking about this with an international investor earlier today, and, you know, for a very good performing data center today, yeah, they're expensive, right? And the multiples that are getting thrown around can be very high. Now, if we're talking about a trailing 12-month number or a forward-looking number, you know, somebody said a good data center with lots of different assets that is well contracted should be 25 times. Well, okay, 25 times forward or 25 times trailing. But on the other side of that spectrum, I was talking to a big investor in the data center space today. You know, one of their largest assets is fully contracted for 15 years with two counterparties, Google and the US government. You know, that's pretty good paper. That's a pretty good long-term bet on who your payers are. So, yeah, they're expensive, but the upside potential is there.
You've brought up another dimension of investing in this world, in this market regime, and that's partnering with the US government. The state capitalism that we traditionally used to focus on with China is now coming out of the American economy. Geeta, does that change the market backdrop?
Absolutely. I think each one of these events changes the backdrop. There is some bit of confidence that comes from all the regulation that happened to the banking system after the great financial crisis. You have all the stress tests, and I think part of the reason why every single event of this kind is not spilling over into markets is because there's a lot of